Well, I just wanted to first introduce you. So Juliana Kennedy is a CPA, and she specializes with businesses, entrepreneurs, and also she is a QuickBooks expert too, as well, as you can see from the sign behind her.
You can hear that.
Yes. And so that's why I wanted you to come and talk to us, especially around this time of the year, because we're, with the pandemic and all the things that are happening, I think small businesses really need an extra bit of help right now. And so I have a few general questions, and then as people come on, we can have them answer, ask you more personal questions about their circumstances.
Awesome.
Okay?
Awesome.
Great. Okay.
So go ahead with the questions.
Okay. So the first thing I wanted to ask is, in terms of the stimulus package, right? Like, with the PPP loans, if somebody got their PPP loan, what do you suggest in terms of what they should put aside for taxes? Because that loan is, they say it's up to 75% forgivable, right? But what does that really mean?
Actually, it's 100% forgivable if up to 70, you can use up to 75% of it has to be used for payroll related expenses, meaning your health insurance, your payroll taxes, your employees. Can you hear me?
Can
you hear me?
Your internet.
The internet is acting up.
Yeah.
Can you hear me, Kathy?
Yeah, I can hear you now.
It went out there.
Yeah, it's so funny. It's like,
okay, I'll say it again.
It was perfect before, and then all of a sudden, when you were answering the question, it went out.
Okay, I will answer it again.
Okay.
So what happens is that the money you get, it's 100% deductible, but you have to use up to, you can use the max, you have to use up to 75% of it for payroll related expenses. And that could be your health insurance, your total payroll wages, salaries, and then the payroll taxes to fund certain expenses that is all related to payroll. That has to be set up to 75%, or it could be more.
Got it.
And then the rest of the money can be used for utilities, rent, and certain interests and things like that. Again, everybody needs to talk to their CPA because this is a very tricky loan. As things stand right now, IRS wants to tax it. Congress doesn't want them to tax it. So we still don't have the final word yet.
If, like, I were your clients, right, and I came to you and said, I got my PPP money, right, and what would you recommend me doing in terms of setting aside a certain amount, just in case I have to pay taxes on it, or what would you recommend?
At the moment, I'm telling my clients that we actually have had most of them open a separate bank account altogether. So they put the PPP money there. And then as we calculate the payroll, we take it directly from that bank account. So there's no ifs, ands, or buts what that money was used for. Okay. As far as taxability, the jury is still out. We don't know what Congress is going to do, whether they're going to make it a taxable amount or not. What I'm going to try to bring it down. What happened is that now they're saying that the amount of the loan that is forgiven, you had to reduce your payroll expenses that you would have normally deducted by the same amount. But a lot of us figured out quickly that makes that amount taxable, because if you reduce your expenses, your taxable income goes up. So it makes it taxable, yes. So as far as what to put aside, it depends on your tax bracket.
Got it.
Okay, if you're in a 30% bracket, every money, and that was one of the questions somebody else was going to ask. Any money that comes in as a self-employed individual, if you're a sole proprietor or you're a single member LLC, I say 30 to 40%. You have to also take into account the state taxes. So always look at your tax bracket. Talk to your CPA or whoever does your taxes. So at least 30 to 40% of every sale that comes in needs to go to a savings account.
Got it. Now, if they haven't gotten the PPP, but they've gotten the EIDL, right? And that one is also 100% forgivable. And right now, there's no talk about actually taking the taxes out of that one, right?
That one is a little iffy because they still haven't given us the full guidance, so I don't want to speak on that. But the PPP is what IRS has come out and talking about taxing it. And so I will not talk too much about that because we don't have all the rules on that yet.
Oh, okay. So even though the EIDL seemed to have come in before PPP, because most people have gotten EIDL if they applied.
Yes.
And then I've heard only a few of my clients have gotten their PPP, but have, most have not.
They are changing the rules as we go along. So any of my clients whom I felt was okay without it, I told them not to get it because I knew that there's no free lunch. And somebody actually made my name with no free lunch Juliana Kennedy hashtag in Facebook because I said that there's no free lunch anywhere. So I'm suspicious by nature that these people are going to find a way to get some sort of tax out of this thing.
Mm-hmm. Interesting. Even though it's supposed to be supporting us and helping, right? In terms of giving us a stimulus because of the pandemic.
What Congress thinks and what IRS thinks are two different things. And that's why I never pay attention to anything that they talk about in Washington, D.C. for the politics. I only pay attention when it comes down as a rule from the IRS.
Now, in terms of, in a general sense, I wanted to ask about for businesses, if you are, like, tell me, just give kind of a little bit of a breakdown in terms of the, difference between, what I heard also is that, with the PPP loan and those kinds of things, like you can't file for it if you have a C Corp, but you can't, what is the difference between those? Like if you're incorporated as like either sole proprietor or S Corp or C Corp, is there a difference?
No, as far as I know, it did not matter to my clients who were C Corp or S Corp or sole proprietor. It's just that initially they did not include the sole proprietors, the Schedule C people and the one person LLC. Initially, when it came out, they didn't include those. They said employees. And then a few weeks later, they came and included those people. So it did not matter whether you were a sole proprietor or a C Corp, as long as you're below the 500 limit that they had, 500 employee limit that they had, and you go on and you fill in all the requirements that they need. The only people who were not allowed to apply were the publicly traded companies. And I don't deal with any of those people, so I don't know what happened to them. But I know that it did not matter, C Corp, S Corp, sole proprietor, and the K1 people, partnerships. Later on, they added all of them in there.
Okay, got it. And then in terms of like what's going on right now, if somebody owed money to the IRS, right, are they working on helping them during this time too, as part of the Stimulus Act?
Absolutely, 100%. Do not be afraid. The chances of you getting somebody to talk to at the IRS now is zero. They don't take phone calls anymore. And so if you owe money, I'll suggest you go to irs.gov and then put in a search box, making payment arrangement. In fact, I was working on one for somebody this morning. And then you create an account, and then you put in the installment how much you think you can pay. You can make those arrangements yourself. You don't need anybody. These days, everybody is educated. They can read. You can go there and make those payment arrangements yourself. If you owe below $50,000, you can easily make a payment arrangement. I think they charge like $149 something, but you can do these things yourself and make a payment arrangement. As long as you can pay a little bit of money, they are not out to close your business. They are not out to seize. The last thing they want is to seize your property. So by ignoring them, that's when they get mad at you. But if you owe, even if it's $50 a month you can pay, they will take it. Illinois will do the same. I was on the phone with a gentleman, they're fixing something for a client. And he said, Juliana, we are not up to get you, okay?
Yes, absolutely. And then this is something that we were talking about in the very beginning about how I've talked to some clients where they talk to their CPA about certain tax payments, and their CPA is not willing to actually call up the IRS to help them. And then you and I were just talking about how you do that for all of your clients.
Yes.
Why is it important for you, to help your clients in that way, to call them up and to make those arrangements, or to help them to maybe reduce some payments?
Because you are the expert. They give a license. You cannot buy CPA licenses from the street. They give it to you for a reason. So you have to help your clients. Even if they've been with somebody else who did not help them, well, the minute they walk in this door, they're family. And I take them on. I take all my clients like family, So I'll get on the phone because people get nervous when it comes to numbers and taxes, So I feel it's my job to calm their fears, The first thing anybody get a letter, they call me, I say, calm down. They're not going to take your house. They're not going to take your first child. I'll make sure of it. No matter what it is, and it could be a small glitch, a small mistake or something. And if it's a mistake, we'll fix it. It's not the end of the world. So anybody who has that issue, don't worry about it. You can call me for 20 minutes for free. I'll see if I can help you. If I can't, I'll shoot you in the right direction. But if I can, I definitely will help you. You shouldn't fight this IRS on your own because they can be intimidating sometimes.
When I was studying for financial planning, my tax professor actually talked about how you can't evade taxes, obviously, right? Like it's illegal to evade taxes. However, it is legal to avoid paying too much in taxes.
I don't know about avoid, but my job is I'm like the judge in the middle. I make sure that you pay what you're supposed to pay and you're not overpaying it unnecessarily. That said, you need to do some tax planning. You don't wait till April 15th to call the person and say, oh, how much do I owe? And here's my papers. You got to do tax planning throughout the whole year.
Right. Well, what are some of the smart things? Is there like one or two things you can tell a small business owner, an entrepreneur, that's going to help them in terms of saving some money on taxes?
So the number one thing that I find most small businesses they know is that they can have their own retirement account as self-employed individuals.
Yes.
That's huge.
Yes.
Because it's called SEP IRA. It's SEP. If you go to irs.gov, all the write-up is there. You can read up on it. Yeah. You can put up to 20% of your profit.
Yeah. I go through that with my clients for sure.
Yes. That was the number one. That's right there. It's a lot of money for people. And some people didn't know that they can also put their health insurance premiums, like the health insurance plan for themselves and their family. self-employed individuals, you can write that off as well. Those are just the two. I love it. My job is done. Yeah. So some of them, if you are S Corp and you're C Corp and you have yourself on salary, it's about 24% of the wages, the total wages that you are taking. And it takes some planning. So any of you interested, we can do private sessions. This way I can ask more questions and give you a customized plan for yourself.
Perfect. All right. Well, let's lead into it. Since, Dewan just came on.
I love it. I love it.
Yeah. And he has some personal questions to ask you too. Yeah.
Yes, sir. Yes, sir. I'm at your service.
Thank you so much for being here.
My pleasure.
Ms. Kennedy. I just have a question about, this is, of course, my first business as an entrepreneur, and I like to say that I'm a accidental entrepreneur because I didn't really plan it, but running an acting business has turned into that. I have an S Corp right now for my business as an actor and my business as a coach. They all are under one S Corp. I'm having a hard time understanding. Let's just talk about the coach side right now, and this could go for any business. I'm having a hard time understanding how to divvy up payment. What I mean by that is Katie's always like, pay yourself first. I'm like, but I don't know how much to pay myself. So let's just use even numbers. Like if $100 came from a client, right? $100 came from a client. How do I know how much to put I don't understand how to put it where, because in my mind, I'm like, I got $100, yay. But I know that's not sustainable. And I just heard you say 30 to 40% of every sale comes in needs to go to a savings account so that we can pay for our taxes. So that still leaves about 70%, let's just say 30%. That still leaves 70% that needs to go somewhere, right? So out of that 100, how much does Dewan get? How much goes into, I think you get the question, right? It's kind of like.
I do. For S Corp though, S corporations, you have to do payroll for yourself. You cannot just take money when you want. Like a sole proprietors, they can take a draw, whatever they want. But as S corporation, if the company doesn't owe you money, you cannot just take money. You have to do payroll. And by doing that, then the withholding comes out, the Social Security comes out, the Medicare comes out. And so if the money comes in that case, that 30%, 40% does not reflect to you. So you still have to do the payroll. The taxes will go to the government when you do the payroll tax withholding and send it in. Okay, so it takes longer to explain, but the 30 to 40% I was referring to sole proprietors and one single member LLC people who don't have to do payroll for themselves.
Got it.
Okay,
Got it.
But with you, if you're doing payroll, I do a tax strategy where I take extra taxes on each paycheck so that at the end of the year, the profit that will come from the S Corp, which will be rolled into your personal taxes, will be covered. So it's a whole strategy thing going on.
Okay, I get that part. That's a taxes part. But how do I guess as a new business, then I'm confused with like, you're trying to stay afloat, and so that $100 that we would break down, and you got to get payroll. It's like I can't pay myself just yet if the business isn't lucrative, or if it, you know what I mean? And so from my understanding.
I see. So in terms of cash flow, you're talking about cash flow. So I tell my clients, if the business cannot pay you yet, it's okay if you have other way to support yourself.
Right.
If you have other way to support yourself, then I'll say pay the business expenses, and whatever is left, you can keep it on the side to cover business expenses until the company can pay you.
Okay.
Okay, makes sense?
It does. Thank you so much.
My great pleasure.
I think it's just trying to figure out where all the money goes now, so that so the IRS doesn't come. Yeah. Thank you.
Don't worry.
This is an interesting conversation because like CFPs and like accountants also have a little bit of a difference in terms of I think CPAs are definitely going to be on the conservative side.
Right.
We are.
And then and then in terms of financial planners, they're going to be a little bit more on the aggressive side. Okay. And so my rule of thumb is to put away 25 to 30% for taxes. And the way to determine that is 25% if it's an amount like less than $1,000, I would put 25% away, right? Anything over $1,000 that you're getting paid, I would put 30% away into your savings account for taxes.
Okay.
There you go. You get a happy medium.
It's great, and I don't want to take up too much time, but then I'm just looking as a follow-up. I guess I'm just trying to figure out a structure. Like if $100 comes into my business, how do I know what goes where? Because I can automatically pay stuff. You know what I mean? I can automatically pay stuff. Jacob, Daddy's
Do you have a budget? My question is, do you have a budget for your expenses?
I'm sure. Yes, I do. Yes, I do.
Okay. So
yes, I do.
build an Excel spreadsheet so you know each month. Make a list of all the regular expenses that you have.
Yeah, I have that.
So
yes.
you know, so when the money comes in, you know you've paid everything. So once you know you've taken care of your business expenses, then whatever is left, then you can pay yourself and all that stuff. But first, make sure your business can stay afloat. So keep a budget. Mm-hmm.
Okay.
And if you don't have it, you can do Excel spreadsheet or in QuickBooks. It depends on which version you have. They have a budget template in there that you can use.
Okay, that makes sense. So we've worked on a budget with Katie. So take that budget, and then it's saying, you're saying just divvy it up after that. I get it. Okay, that makes sense.
Yes, and follow it strictly.
Okay, follow it strictly. Okay.
Then that's the opposite of kind of what I talk about.
Yeah.
Well, I mean, I'm flexible, but you know, some people will get tempted when people are offering courses. And then the next thing you know, they are breaking the bank to go take a course, $2,000-$3,000, and then they can't pay their rent. So I say, make sure that you've paid all your stuff before you go do the big courses. I'm conservative. Sorry.
No, it's totally good. It's totally good. It's great to have these perspectives, right? And it's important that everybody here, especially, is like listening and thinking about their taxes, because the taxes are the number one thing. I always say, not just pay yourself first, but you're paying the IRS first, essentially, because the IRS is going to come after you if you don't pay them. And then you're really paying yourself first after that.
Absolutely.
Yeah.
Cool. Thank you for your time.
Yeah. And Dewan, hold on, just in terms of, Dewan, I'll help you with like divvying things out as well.
Thank you.
Yeah. Now that we've kind of are getting into those spreadsheets and those kinds of
things.
Awesome.
Okay. All right. Hashim, did you want to come on camera?
Sure. Hold on. I have my video on. Hi, everyone.
Hello.
I want to kind of double back to the PPP taxable question. If it turns out that is taxable, can we give the loan back, 100% of the loan back, without being taxed if we already got approved for it?
I am so with you on that, brother, because that's what I'm suggesting to my clients. That this is my own little brain. I figured this out. If the loan is only 1%, okay, if the interest is 1%, and your tax bracket is even 10%, and you give it back, and you get the chance to deduct your whole payroll expenses, you are 9% ahead. That's just my own little brain. So I'm telling my clients, put the money, make your mind up that we're going to pay that money back, because if they end up saying they're going to tax it, there's no way I'm letting any client, offer to get it forgiven. We're going to pay it back, and then we'll take the tax deduction. That's my strategy.
The tax deduction on the 1%.
No, what happens is that they're saying that the interest rate on the PPP loan, if you're going to pay it back, is 1% at the moment. So I tell people, if push comes to shove, we're going to offer to pay the loan back.
The entire loan.
We're going to entire loan and take the 1%, pay the 1% interest, which in effect is also a tax deduction anyway, the loan interest. And then we'll deduct the full payroll expenses. So in a nutshell, actually, if we're going to still deduct the 1%, so 10%, we'll say that everything stays the same for everybody.
So basically, if you allow it to be forgiven, then it's taxable. But if you pay it back, it's not going to be taxed.
I think that's the way they are going, but I don't know what Congress is going to do. It's like I don't have a crystal ball. I wish I did. Yeah. Okay. Make sense?
Yes. Thank you.
Excellent.
Let me ask you one more thing about that, because like you were saying, just break down the numbers a little bit for me in terms of the 1% versus the 9%. Like if you're in the 10% tax bracket.
So this is how I'm seeing it. If you are in a 10% bracket and your wages was say $100. And they're saying because they forgave you the $100 loan, you won't be able to deduct the $100. That means that your taxable income goes up by $100, right? Mm-hmm. If you cannot deduct that wages. So if we say, okay, fine, I don't want it forgiven. I want to write off my whole $100. That means if you're in a 10% bracket, you save that 10% in taxes on that $100 wages that you were deducting. And you pay that loan back and pay the 1%.
Okay.
But that 1% interest that you're paying back is also a tax write-off, right? Mm-hmm. So you gain by paying although it will be tight on the cash flow front. Mm-hmm. But I'm telling people that we would rather pay it back and pay the 1% interest than give up $100 of wages deduction.
Got it.
Okay. So it's all in the strategy.
Okay, I got it.
Mm-hmm. So that's why people should be talking to your CPAs and figuring out what to do in the event Congress come back and say we cannot arm wrestle the IRS, so you all have to pay it back or not write off. Then you'll be prepared.
Got it. Okay.
Makes sense?
Yes, that makes sense. Yeah.
I ask your people if everybody understand what I'm saying.
Yeah. You guys, I think. Got it.
Yes. Mm-hmm. I'm sorry. I'm the biggest 8-year-old you will ever find. I'm always happy. I'm 52 years old. So, go ahead. I'm ready.
Does anyone else have any questions? Autumn, it looks like
I had a question. I don't think I qualify for the PPP because I don't have a business. I just have a social security. I just have a, what do you call it, tax ID number.
Okay, but you're not operating the business at all?
Not really. I was getting paid through my number, the business number, but I wasn't like I set up a company and then paid the company and paid myself. So
but were you providing services as a sole proprietor?
Not this year, just for a little while this year, just for like 3 months this year. And then I got a job where they take taxes out.
Okay. Yeah, I wouldn't bother with it because it's too much hassle. If you feel you are afloat, you have enough cash flow, don't mess with it.
Okay.
Just let them be.
Yes.
And you focus your attention on your business instead of wasting time trying to grab that money.
Okay. Thank you. I appreciate that. That was I thought so, but now I know I can no longer brain space to that. I don't have to give any brain space to it. Thank you.
Exactly. Okay. Exactly.
Instead, Autumn, if you do need some money coming in, it is worth applying for unemployment.
I did apply for unemployment. I don't know if I get the PPP bump automatically or if I have to apply for that separately.
The PUA, it's the PUA bump. You should be able to get it if you qualify for it. Absolutely.
But do I have to fill that? So it asked for some special kind of, it asked, I was filling out the thing and it said the unemployment and it said, you know, for PPP stuff, but it was all kind of stuff I didn't understand. I didn't understand why I had to fill that.
Was it asking for Schedule C, net profit from Schedule C?
Yeah, something like that. Something like, and I was like, well, they've been taking taxes out of my last job, so I didn't think I could fill that out, so I didn't. So when I get my,
that was the Schedule C net profit it was asking for, probably.
okay.
But I wouldn't mess with it. If you feel you don't need the money, don't mess with it. But if you feel you need it, then maybe ask for help and then get it done.
I'm going to, because I definitely can't get work in television because of the virus. There's no production.
Okay.
Yeah. So I'll wait. I guess I'll wait till I get my first check and see what it is, and then if I don't get the extra money, I'll try to get in touch with them.
Okay.
You can also send me the like, do a screen grab of what they're asking for.
Okay.
Send that to me.
Thank you.
Excellent. Okay.
Elise is not on here, but she did ask me to ask you about the difference between QuickBooks and FreshBooks and kind of what your thoughts are. And for a small business, you know, she is, I think it's like just her and her husband are the employees of the company. She may have one other person, but I doubt it. I think there are other contractors. So what is which one do you prefer? I assume you prefer QuickBooks because that is your expertise. However, if that is the case, will you explain sort of the difference between those two and why?
Actually, I'm not married to QuickBooks.
Okay.
I am exploring any accounting software that will pass my ear. I explore it. Right now, I'm into Xero, QuickBooks, FreshBooks. Sage also has a platform. The reason I would say QuickBooks, though, is that all the other softwares are playing catch up with QuickBooks. So FreshBooks, it was designed for freelancers. So they don't have all the capabilities that QuickBooks does. I understand QuickBooks is getting expensive and people are getting mad at it. Like if they have employees, I would suggest they stay with QuickBooks. Okay, they have contractors. They can pay contractors even direct deposit through QuickBooks. So as long as they know how to use it, they will be okay. I do have my training, which I've recorded all the 8 videos on each topic. And I also have it by a la carte. So you can just buy, if only payroll you want, like $127 just for that video individually. So maybe a solution like that may make her fall in love with QuickBooks. But you can go to all these ones and you still want to see that you're going to be missing a lot of the features that you are used to in QuickBooks and you want to come back.
Yeah, I do feel like, you know, QuickBooks is a lot more expensive than, you know, FreshBooks is what, $15 a month, I think, or $10 a month, I think, if you have a discount. However, QuickBooks, you know, I mean, you can get the cheaper version, right? But it doesn't come with a lot of things that you
actually need. They've changed it because right now, if you go there, the simple start, most people can get away with just the simple start, which is $25. It has a lot of features in there. Plus the 1099, it keeps track of all the 1099s. So you can actually generate the 1099 within QuickBooks, even with the simple start. It's $25. And I think they have some sale going on. And then the next one up is the Essential, which is $40. If you say you want to have enter a bill and pay later and print checks and things like that, then I would suggest you go to the next one up. But these days, nobody prints checks anyway. So
I just got a check recently.
Most of my people don't. And if they do, I brainwash them to pay through the bank. The banks will print and mail the checks for you, save you some money and some hassle, you know? Yeah. Any way to save money, you know? So I'll say most people can get away with a simple start, the $25 in QuickBooks. if
Okay.
you don't need anything. If anything, then you jump to the essential if you want to write checks.
Okay. Dewan
Yeah.
has another question for you.
Yes,
Now
sir.
I have two because
Okay,
I,
I'm ready.
and I want to apologize. My kids are homeschooling, so they keep coming in. So I apologize.
Don't worry about it.
But the QuickBooks part of that is, I have the plus. I couldn't do what I needed to do on the essentials because of under my S corp and the two businesses, if that makes sense. And I'm really trying to get right with my money this year. And as I told Katie, but because in my coaching business, I have different, like you, I have different, it sounds like programs, right? So if I have A, B, C, D, I would like to personally know what's the expenses on A, what am I making on A, same thing for B, so that I can, do ads, or I could, pay myself, or however that's, and then on the acting side, I have a whole different,
So you're using classes?
I'm using QuickBooks Plus, I think it's
Yeah,
called.
but so that means you're using the classes to identify, to be able to print the profit and loss based on each class? Is that why you need a plus?
I need the projects. The
Oh,
projects.
the project.
The
Yeah,
projects.
that one, they put it up there.
They put it up there, and I can invoice from there, and I can, but so anything that comes in, it goes into that actual project. This way, I mean, it makes it easier for the bookkeeper to kind of figure it out. So I don't know if you found a workaround. I was asking. The reason I'm saying it.
I think I may have to take a look at it, because I think you can use classes, and I don't remember all the features in my head. If classes is, I think you can still get classes in Essential. I'm not sure. I don't remember, but I'm dealing with too many programs. But go and see. I know, but I have to serve my clients. I'm not married to QuickBooks. I don't care who they are. As long as my client is happy, I'm good for that. So check under the Essential. If the Essential has classes, you can use this by classes and save yourself $30 a month.
$360 a year. I've already done it.
Yeah.
Yeah, it's a lot.
Yeah. So see if you can, you go to intuit.com and look at the features. If you can get classes will pull P&L on its own. And if all fails, you can set up separate bank accounts and just pull the profit and loss by bank account, and then you can just use the Essential for that.
Okay, great.
Because you can pull profit and loss by that, and then you trick it and say that's location, and you use the location, and you can pull P&L by location. So there's always a way. I can take a look at it for you. I'll give Kathy my 20-minute link, and anybody who wants to chat with me, I'm happy to do that.
Okay, and my real question was just that as I bring on actual employees to my business, how do I phrase this? Because they have to be employees because of the new California law with AB 5.
Yes.
So before they could have been consultants where I would 1099 them, but because they're working under my coaching umbrella, we have to make employees. I guess I'm just really, Miss Kennedy, Katie, I'm really confused on, like, if somebody says I want to make $27 an hour, like, how do I know that I can afford 20? I just don't. I guess it's still just not. It doesn't make sense to me about how much I can pay them.
She's nodding. Let's see what she has to say first, and then I'll go behind her.
No, I want to hear your take on this. Because this is a very good question for a CPA.
Okay. So the $27, they want $27. What you got to do is you're going to add on the Social Security, your portion of it that you're going to pay. So you're going to have to match their Social Security, the 6.2%. And then the Medicare, you're going to match that for 1.45. And then you're going to have to look at the unemployment for the state. I don't know, it varies per employee in Illinois. And I can look at that for you for California. And also you add the 0.6% of federal unemployment. So you add all the charges that you're going to be paying and add it on the $27. So technically you're going to find out that you're going to end up paying them almost $32 because of all the additional costs. So it's going to cost you $32 for you to pay them $27. And then you can go back to them and say, this is what's going to cost me. So you're going to have to bring your $27 lower so that I can afford you.
So this is about looking at, let's just say, it looks like about 8%. If we add it all up, 6, 7, 8,
Yeah.
more, maybe even 9%. Maybe, I mean, if we're, so add, what I hear you saying is add on to whatever I think I can pay them. Let's just use a round number like 20. I'm adding on 9% because that's what I'm really going to have to pay out of my thing.
It costs you to have it. And then if you have to give them health insurance, you have to take all that into account, all the expenses that's going to cost you. So they're not just coming on board just for their paycheck only. So you can negotiate.
Do I have to give them health insurance? Okay, that's another conversation. No. Okay.
I take the fifth on that one.
Yeah, no, I was like, it's only 2 employees. I think if it's 40 or more in California, you have to do it.
I think 50 or more on the federal level. But
yeah,
for me, though, if you can afford it, I advise my clients, if you can afford it, please do, because they come to work with a whole heart. If they know you're taking care of them with the health insurance, if they know you're taking care of their retirement, you set up the retirement account, let them participate in it. If it's not going to hurt your business, offer it to them. Be human about it. Think about it. If it was you, would you want the person to do it to you? You got to be fair.
You know what I call that? Corporation goals. That's what I'll be trying to get to. Not right now, but corporation goals to get to.
I got it.
Thank you. So
absolutely.
And then that bigger question. I'm sorry if anybody else wants to jump in and ask a question, please do. But so that bigger question was then I can figure out on how much my business is making, what it needs to pay the bills for the business, and an expense now too, right? That I would put in there before I pay myself. That the first question I asked. I mean, this goes right. Okay. Cool.
Yes.
Yeah. And I because California is a little bit more expensive, I would actually add on to that. You know, this is the first time I'm probably a little bit more conservative than you are with Juliana on that. I would actually probably do 12 to 15% actually total on top of whatever it is that you're paying them. Mainly because California taxes are more expensive.
There you go.
Yeah.
Okay.
Awesome.
Appreciate that. Thank you again.
All right.
Can I chime in on that really quick?
Hashim.
The one on the average production budget, we add 18 to 20% fringe for that.
There you go. There you go.
Yeah.
Just to make sure that we're covered.
Team effort.
Yeah.
Thank you.
I love it. I'm having fun.
Yes.
Yeah. Okay, Kathy, you take it over. What's next? I'm ready.
Okay. So just in terms of the last thing is I wanted to talk about was the, a little bit more about QuickBooks in terms of, so you don't care if, you don't see that much of a difference between QuickBooks and FreshBooks, because for me, when I look at those two things, it's like FreshBooks is great if you're just starting out your business and, you don't have a lot and you don't need a lot and, you're not making a lot.
I quite frankly don't like FreshBooks because it lacks in reporting. Up until recently, they didn't even have a balance sheet. And so I'm not big with FreshBooks. FreshBooks is for freelancers who are writing up and doing just simple accounting, just to track expenses. But it's not for businesses. They're trying to force themselves to be a business platform, but it's not. So I will not recommend, especially if they've now grown and have employees. That's not their way to go. If they want to look at anything, Xero is also up there, but they are also not 100% as comfortable as QuickBooks is.
Okay. And then in terms of QuickBooks, I know that one of her questions also was that, there's been some kind of like an error in terms of connecting to your bank account. And I've noticed it too on my QuickBooks, is that sometimes the bank account,
the link
it breaks, right? And then when you reconnect it, all of a sudden it's like doubling up. Like on mine, it'll double up, like two charges. The same charge will be on there twice, or the same income will be on there twice, and so is there an easy way to fix that or to you know.
So the way the breaking is on purpose. They do that to make sure that you actually own the account. So if it's your account, you will know how to connect it. That one is done on purpose. As far as it doubling up, it happens all the time with my clients, and that's why I suggest do not post blindly. Always make sure you're paying attention and also reconcile every single month, because otherwise you don't know which it picked up more. If it picked up less expenses and it picked up double your revenue, if you don't do the bank reconciliation, you're going to end up overpaying in taxes.
Mm-hmm.
So always do the reconciliation, because if something went out of whack, it will show you in terms of looking at your bank statement and looking at the QuickBooks download. But the breaking up, there's nothing any of us can do about it. It's to protect us.
Got it. Okay.
So you have to reconnect it.
Yeah.
Mm-hmm.
And then what I heard from them was that it's just taking, you know, QuickBooks is doing that. The whole reconciliation takes hours for them to go through and do it.
No.
That's what they said.
No, in fact, if you are downloading and you are diligently posting, like I would tell people once a week to put aside maybe 1 hour, like on a Sunday afternoon or something, just take once a week, do your posting with your bookkeeping. If you memorize it, and I have all that detailed in my training, if you memorize it, most of the time it will recognize it, not 100%, okay? And then as you are posting, it's checking off in the reconciliation. So at the end of the day, when you put in reconcile and you put the bank, you go there, everything is already reconciled. It's a piece of cake. And it's all in my training.
I think that's it. Yeah, unless anybody else have any last questions. Autumn,
I have
did you
one
have one
quick
Okay.
question. Yeah.
Yes.
So I work in television, but I also have I write books, and so I expense anything that has to do with the book. And I just wanted to confirm that, is it still true that if you pay someone under $600, you don't have to 1099 them? Is that still?
Yes. But
okay.
my caution to people is you don't know how much you're going to end up paying somebody. So always, always, always collect that W-9 from them before you hand over the check, even if it's $200, because you don't know when you may call them back again to do a job and you forget that you pay them $300 and you pay them, before you know it, it's over $600, and you don't have any W-9 information yet, Social Security, and they will not give it to you come January.
Right.
So always take that W-9 from them. You can pull it from irs.gov and have them fill it up before you pay them a dime.
Thank you so much. That's such good advice. Okay, great.
Yeah, that is great advice.
Yeah.
We have to always be in practice of doing that, especially when we own our own business.
Yeah, exactly.
You better be, because otherwise the IRS will come and audit you, and then when they do, they're going to take, you can deduct it. Since they didn't pay taxes on it, you cannot write it off, and you don't want to be caught like that.
Not at all. Yeah, thank you. And it does add up.
Trust me, it does. It does.
Okay.
Absolutely.
Awesome.
Great.
Juliana, will you tell us how they can reach you if they want to talk to you? Like you said, you're offering a 20-minute personal call, and there's no charge for that. And so if anybody wants to call you, how do they get in touch with you for that? And then also, what else do you have that you want to offer?
So the way they can reach me is jnkcpa.com. That's my website. You can just fill out the information on the contact and say, I want to have a 20-minute complimentary call with you. And one of my strategies to deal with people is I can do the 20 minutes, find out what the issues are, and if I feel I can help you, then we can hop on a 90-minute session to solve your problem. But first, we have to talk for 20 minutes to see if I can help you. So JNK, N like Nancy, K like Kennedy, CPA.com. Okay. And the other offer is I have the QuickBooks training recorded, and it's on Teachable. So if you go to jnkcpa.com, it's way at the bottom. If you click on there, it will tell you all the topics that I've already recorded, and you can buy a la carte, or you can buy the full course if you want to.
Perfect. That sounds great. And then, yeah, like, and then for those who are watching this recording later, you know, one thing I loved what Juliana had said in one of her Facebook Lives about how, you know, she really helps, you know, her clients to either talk to the IRS or, you know, to get payments down, to do all of those things. She really helps you to fight for, you know, your money, essentially. And so that's one of the things I really like about you, because I've heard so many CPAs who are just not willing to do the work and not willing to, you know, go to bat for you, you know. So, you know, if you have any of those issues, it's important, you know, to have somebody on your side and have an advocate. You know, it's just like having a good lawyer, right?
Actually, I take it all the way to taxpayers advocate. If IRS doesn't give me what I want, I go to the taxpayers advocate. And the minute I mention taxpayers advocate, the IRS will shake and give me what I want. Okay, Miss Kennedy, okay. But they kind of know my reputation because they know that I do a good job. I mean, I once had a client who was itching to leave, and I said, okay, goodbye. She went for a year or two. She got into a lot of trouble, and then she came back. So when the IRS agent heard that I'm back on the account, he said to her, oh, you are back in good hands, because they know my work, because I do a good job. I make sure that you get everything that you deserve. I don't do any fudge numbers. I make sure, like I told you already, reconciliation. Before I do any tax return, I look at every line, every transaction, make sure it's in the right category. So when they come to audit, and for 34 years, knock wood, I don't have a wood here, they've never pulled my file. They've never pulled my file because they know that everything, and I'm also licensed in Canada and in Kentucky and Illinois. So I do all states, and I do Canada taxes as well. So it's not by accident that they don't pull me, because they know I do a good job.
Thank you everyone. And yeah, we'll, you know, I'll post it all onto my blog too, and all the information to
Awesome. Okay. Awesome. Thank you. God bless everyone. And all of you.
Bye.
Stay safe, all right?
You okay. Too. Thank you. Bye.